Good day, ladies and gentlemen, and welcome to the show on this January the 20th, 2023, a Friday. Thank you for tuning in. I'm glad to have you guys here. Now, this weekend, I think I'm going to start something new. I'm going to start a Sunday show where I'm going to tell you guys stories, Anyway, just something a little bit new for the weekend, but anyway, we got stuff happening in the news today. And Medvedev, I guess that's his name, Russian. It says outspoken former Russian president and current deputy chairman of the Security Council, Dmitry Medvedev, has issued his latest stark warning to the West on Thursday, saying that if Russia is on the brink of defeat, nuclear war is likely to follow, he said. He made this comment at in a post on Telegram messaging app. He says the defeat of a nuclear power in a conventional war may trigger a nuclear war. Nuclear powers have never lost major conflicts on which their fate depends, the former president said, who in prior years has actually been seen as more dovish when compared to Putin. Added Medvedev's comments came as a reaction to news of a major meeting of Western defense leaders set on Friday at Ramstein Air Base in Germany. So that's what's happening on that front. Now, I want to talk about a little bit of something else here. The Fed, they are planning on delivering two 25-point rate hikes in quarter one of this year. And so they're tapering down because they were doing 75 basis points. And they're doing 50, and now they're down to 25. So you see, they're tapering off now. But I'm going to tell you guys what, and they're talking about a long pause, too, the rest of this year, not doing any more interest rate hikes. But, the damage is already done. And because of the lagging effect of what they've done earlier, and the compounding effect of what they've done, the damage is already done, guys. We're going into a major recession, and they're going to have to lower interest rates. Thank goodness they got a little bit of room to lower them. Going into this major, I use the word recession, but it's actually a depression what we're going to go into. Take a look at this. More news. Where is it here? It says, I have difficult news to share. The Google CEO tells employees 12,000 jobs are going to be cut. 12,000 more tech sector jobs being cut. That's a lot of jobs. Even for a big country like the United States, that's a lot of jobs being lost right there. 12,000. And these are reasonably high-paying jobs. But this is just par for the course what we're going into. See, what you guys need to understand about inflationary cycles and also deflationary cycles is when things are on the way up, it tends to feed itself. It's a self-feeding cycle. But when things are on the way down, it's also a self-feeding cycle. And what I mean by that is as people lose jobs, it's spin-off effects. Other companies start to lose jobs because they don't need as much help. And it spins off because when that money's not being produced into the system, then it lowers. It's kind of like a spin-off effect that occurs. It's almost like a flywheel momentum, Once you get a flywheel turning, and you add a little bit more momentum, it spins faster and faster and faster. It's a self-feeding cycle. And this is what it can be, deflationary, a cycle. It's awful hard to stop once you get it started. And the Fed, their tools are very limited to fighting deflation. They do have a tool to fight deflation. They don't have any tools much whatsoever to fight deflation other than raising interest rates. Fight inflation, I should say. They don't have much tools to fight inflation other than raising interest rates. But to raise interest rates flips the switch to the other direction. So the economy's going up in this cycle of increasing inflation, increasing everything because money's being added to the system. And then when they turn the spigots off, And they cut off that money supply from coming in. It takes a little while. There's a little delay there because of the momentum. But once the momentum goes into a reversal, deflation's very fast. It's faster than inflation. It's kind of like it takes a long time to fill up a swimming pool, doesn't it? Say you put a garden hose into a swimming pool. It takes a long time to fill it up. But how quick can a swimming pool be emptied if a guy comes along with an axe and chops holes in the side of the swimming pool? That's inflation and deflation. And so they've been filling the swimming pool up for a long time. We had some major inflation going on. Now that they've done this, and there's a delayed reaction to what the Fed does, see? And this is what I'm concerned about, is now they've done the damage. They've already chopped the holes in the side of the swimming pool, but all the water hasn't leaked out yet. It's coming. It's going to be a tsunami of leaking out. And then they're going to have to try to fix this damage that they did down the road. So, we're headed into hard times, and they can't put the money in the need to fix this, or they're going to cause a hyperinflation. They're really truly trapped. Okay, moving on. We're going to take a look at the markets, but all these jobs being lost, we're going to have a sudden downturn in the markets in the very near future. I see it coming, because there's not enough, interest rates are too high, there's not enough money being loaned. The biggest method which liquidity or money is pumped into the system in the form of debt, because all money out there right now is debt. The biggest form that it's get pumped into the system is loans. They loan new money into existence through the fractional reserve banking system. It's a very simple process if you've got the ability to do it. It's an unbelievable process, to tell you the truth. Understanding how fractional reserve banking actually works is they create money from nothing. Now you got to pay it back. You take out a loan, that money didn't exist until they write it on a piece of paper or put it a book entry into a computer. Now you got to pay that money back. But that money didn't exist. They created it from nothing. And this is the biggest method of which money gets created, is in loans. When they raise interest rates like they're doing now, and they're still raising them even though it's only a fractional amount. But when they get this high, just fractional amounts are very important to how much money is going to be lent out into the system. And that's the only way money is created into the system. Now we got a liquidity crunch coming up, and the banks are going to be starting to feel it pretty darn soon. Where is it? I got it here someplace. The words I'm looking for is negatively correlated. What's happening is we're finding something happening within the system right now that's very important for you to know, is gold and silver are getting ready to take a big boom, guys. And it's got to do with the raising of the interest rates. What's happening out there right now is that there's avenues where money flows, and it's been flowing off into several different directions in the system, the liquidity that's left, and we're finally going to see a flow and into gold and silver, where it's been flowing into the stock market. It's been flowing into the bond market and stuff, the money, big money. And gold and silver are going to start to come into their time. Now, listen carefully to what I'm saying. And I could give you guys the details of why. Maybe I'll do a show and talk about the details of why money's going to start to flow into gold and silver now. But the premiums are not going to really matter that much. Premiums now have become I remember a time not long ago it wasn't any premiums either, or very little premium. Premium was just something that was minuscule, just like your cost of food. Not too long ago, in a world we used to live in, your cost of food was minuscule compared to all your other expenses and living and everything else. And you can put money away every month because now the cost of food's taking a bigger and bigger cut of your income for a typical American, But it's the same way with the premiums. Not too long ago, there was premiums are minuscule. Now they're a significant chunk when you buy gold and silver. But we've gotten used to that now, and it's going to get a lot worse pretty soon. A lot worse. And I mean, I've forecast this period in time coming, and we're getting almost there now. It's going to happen suddenly too, guys. It's going to take you by unawares, where gold and silver are going to catch this enormous bid. And at that point in time, after that happens, you're not going to have any trouble selling your gold and silver any longer. But it's very, very possible that you won't be able to buy it. The average person won't be able to buy it. And in fact, it might become illegal to purchase it. Not to sell it, but to purchase it might become illegal. They're weaning gold and silver investors and the average person out of the marketplace. They're going to save it all for industry, especially silver. They're going to put mandates in where I'm telling you, it's coming, guys. It's coming. Where they don't print any more. The mints don't make any more coins. They make it so that if any silver is going to either go to industry or you'll be able to sell your silver, but you're not going to be able to purchase it. In fact, they might even make it illegal to purchase. And all these bullion dealers out there, you're gonna have to have a license to buy it. They're gonna make it so the average man cannot buy silver bullion unless you have a license to buy it. And what they're gonna do is they're gonna do this because they're gonna run out at a certain point in the not too distant future. They're gonna run it because silver investing is gonna go up so great. It's gonna take too large of a chunk of the silver that's being mined every year for industry to survive. And of course they're gonna do some sort of mandate to protect industry. They're gonna have to. So that's what I wanted to say about that. Anyway, moving on. This is what I believe is going to happen, by the way. This is just personally but generally when I forecast something ahead of time like that, it generally comes true. It's my timing that's generally off, but it generally always comes true. In fact, everything that I've forecast from the beginning of my channel, a lot of my the things that I've forecast happening into the future have came true. You guys can check my track record. It's phenomenal of being able to forecast things ahead of time. And I'm telling you guys that they're going to have to restrict the sale of silver to the common man at a certain point because there's going to be a stampede in. And, these bullion dealers will take from what they have for industry too deeply. And this is going to trigger it, what I'm talking about. Anyway, let's move on. Take a look at the silver price today. 23.88, it's up 4 cents on the day so far. Let's take a look at gold. Boy, these prices are going to be a thing of the past pretty soon, I'm going to tell you. Honest to God, Let's take a look at gold. Come on. My charts are going kind of slow. But 19.25, it's down $6.90. Like I say, these prices are going to be a thing of the past very soon. Because you're going to be looking at gold in excess of 3,000 and silver probably well over $50 pretty soon, And that's when you're going to get your time when silver starts to get up near double digits in price. Triple digit price silver. That's when you're going to get your time when this is probably going to be implemented, where they're going to say, hey, you know what? You guys can't buy it anymore. You can sell it, yes, but no, you can't buy it, no. So you're either going to have it or you're not going to have it at that point in time. And the price ain't going to be no $20. and you won't have any problem selling it. Now, you know how it has been. A lot of people are a little bit negative about buying silver because of two things. One is the big premium, and two is it's difficult for them to sell it, to offload it. You know, but they are going to. When I say that it's not going to be difficult to offload it, there is a problem. You know, there is problems in that. One, the government will probably put in some sort of a new tax, windfall profits tax of some sort or another on it. I wouldn't be a bit surprised. And they got that thing where they got like $10,000 and they're going to come in and do all this kind of investigating of everything else and then find out what's going on and everything else. You know, that $10,000 that won't buy you an apple. And they're probably not going to change that because they've had that for years, you know, $10,000 and then they got to do some sort of tax write-up and everything else. You know, that won't buy an apple. And in the future, 2 or 3 years from now, it won't buy an apple. So what are they going to do? Investigate every time a person buys an apple for $10,000? And what'll silver be by then? It'll still buy you 4 bushels of apples. Hundreds and hundreds of them. 1 ounce of silver. You know, I mean, this is the kind of thing we're talking about here. You know? So what'll be worth? Well, the sky's the limit. I mean, we could be looking at $10 million an ounce for silver before this is done. Because the dollar's going to zero, ultimately. And I know that's hard to get your head around, but they're just going to keep adding zeros. And this is one of the reasons why they're coming out with these new cryptocurrencies. Cryptocurrency type things, you know, central bank digital currency, because it makes it so much easier for them to add zeros. In fact, they can add zeros to infinity. They could keep this going for 20 more years. Just keep adding more zeros, boys. You know, move the decimal point around a little bit there. You know, and make $1 billion into what $1 used to be. So in the future, it's a billion, and then call a billion 1 again. You know, I mean, it's all just digits anyway. Why not? That would just nullify the U.S. debt and everything. Just keep adding zeros and move the decimal point. So that the dollar becomes $1 billion. $1 billion becomes the new dollar. And just call it a unit. You know, I mean, it's all the same. This is what they do anyway. Just make it a hyperinflation nation. Just accept the hyperinflation. Embrace it. Keep moving wages up. There's only one thing, guys. There's only one problem, one fly in the ointment for all that. People that are savers in the old dollars, you're going to get obliterated. You know, but I can't see this moving in any other direction because this might be the last big time they try to stop inflation before they embrace it in the end. They're going to have to embrace it in the end. This might be the last big fight that the Fed does against inflation, and it didn't succeed. The war is being won by inflation. And why I say it didn't succeed is because when this system starts to shut down from not enough liquidity in the system, and the banks start to get in trouble, and everybody starts to get in trouble, and the whole system starts to go bankrupt, they will get down on their knees and do anything that they have to do to stop it. And if that means turning on the printing presses like you've never seen them turn it on before, they'll do it. And by that time, they'll have the central bank digital currency, and it'll be just as easy as entering in a whole bunch of zeros and pushing a button. Enter in 50 zeros and push a button. You know? A gazillion, like little kids like to say, you know, of dollars floating into the system. Anyway, moving on. Cryptocurrency today, 979 billion, and we're seeing a Bitcoin price of 21,044. And Ethereum price of 1553. Now, I'm going to tell you, we just got a bad signal for cryptocurrencies. Why? You say, well, Glenn, why'd you say that? Well, you know, I mean, 979 billion. We were over $1 trillion the other day. We were like $1 trillion and change, you know. And the Bitcoin price was the same as it is today. And I noticed Ethereum was basically the same as it is today. Now we've dropped off to 979 billion, so we've shed about $30 billion, right? But the Bitcoin price is the same, and the Ethereum price is the same. Well, this means that from the altcoins, money is flowing in. 20 or 30 billion dollars has flowed into Bitcoin and Ethereum from the altcoins. In other words, people are trading their altcoins for Bitcoin and Ethereum, the big ones, right? This is a signal. It's always been a signal in the cryptocurrency market of down. It means it's going to go down. It's a signal. To me, anyway, it's a signal because they're finding safety, a refuge in the two big ones, Ethereum and Bitcoin. And they're moving out of these little smaller altcoins because they're frightened right now. And there's fear in the marketplace. Fear generally leads to a market drop anyway. So, okay, 33,108 for the Dow Jones today. It's down 31 points. They should be frightened because if the Dow rolls over and the S&P 500 roll over and the Russell and all that, if NASDAQ, everything rolls over, there's going to be a lot of money shed in the system. A lot of liquidity just disappears within the system. And the first thing that they do to try to pay off margin calls and stuff is they sell their risk-on assets, which is what crypto is. If it gets bad enough and real fear enters into the marketplace, then they run to safe haven assets, namely gold and silver again. So there's a big difference between crypto and gold and silver. And gold and silver is risky. Crypto is risky. Sorry, crypto is risky, but gold and silver is safe haven. It's not risky. If you want your money out of the dollar, I should say, it's not risky. Take treasury bonds, for instance. These are used as a safe haven asset. The yen is used as a safe haven asset. There's a number of things people try to use as safe haven assets. Gold and silver is the premium safe haven asset in the world. Been forever and ever and ever, and it always will be. So, okay, let's move on here and let's take a look at the S&P 500. It's up 4 points, 3,919. Crude oil is up 32 cents at $80.65. Bonds and rates. What we're seeing some movement in the bond yields to the upside. The U.S. 10 years at 3.45 and the U.S. 30 years at 3.6. And yields are moving up today. And the U.S. dollar index today is at 102.44. And it's going up today. Well, thank you guys for listening to my show. Like and subscribe. We'll catch you guys in the very next episode. Have a great afternoon. Bye-bye.